Oh, there we go. What's up? This is Noble. Welcome to Insider Trading. I'm gonna do that again. A little phlegm in my throat right there at the end. It's Noble. What's up? Welcome to Insider Trading. One of the only live podcasts that you can watch to get a breakdown of the market, your favorite charts, your favorite stocks, to have the conversations, to ask the questions, to see what people like me are looking at. All right. We're gonna have some fun as always. My name is Noble Woods. If you don't know me, if you're not familiar, 20,000 hours easily in the seat, literally meaning in the seat, trading, learning, options, futures, foreign exchange. I don't love crypto like that. Just don't take that personal if you're a crypto lover. But these crypto winners are serious. It's not the same as the market. I know. I ain't gonna get into a debate about which asset is better. But I can trade anything. I literally spent all of my 30s trying to better understand the market, major sacrifices. I quit a 6-figure job to teach kids. I've taught adults. I teach adults now. I do consults. I've done events around the country. I put my heart in it. I put my heart in this. What is this? I think this is one of the most powerful things you can learn. I just got off the call about 4:30. I got off a call with my nutritionist, Arnitra. The parallels to like getting your nutritional, right, you in line, the right macros, eating the right amount, drinking enough water, going to sleep early, moving, fun activities, things that you enjoy, eating the right food. It's a process. And I was telling her I can't wait to do a testimonial, right? Because, she's premium, several thousand, still premium, to work with her. But I'm like, it's priceless. What I've learned has literally transformed my life. I thank her so much for her service, right? As a nutritionist, as somebody who has put together a body of knowledge to help me get the type of transformation, lifelong transformation that I want, that changes my life. I know how to eat. I know that sounds weird to say I know how to eat, but no, I mean like I lost 20 pounds in like the last couple months. Really from just little small changes, little more, little more muscle coming. And it's such a good parallel to this trading thing. Unfortunately, a lot of people want trading to be let me be honest with y'all. Let me say it for you. Let me say it for the whole world. We want trading to be so easy that you can pay somebody or sign up for some alert group or something, and somebody just tells you when to buy or when to sell and when to get out without you doing any work. And it funds and fulfills your whole life. We all want it easy. We do. I do too. And that's delusion. There's no successful trader or investor who's going to tell you that the whole journey has been easy. It's not. For every person you hear about who's made a million, crazy success, crazy percentage return on some cryptocurrency or something just amazing, there's probably thousands of people who have lost for every one major success story. But what do we share? We share the success stories. We hide reality. I don't know if some of y'all gonna. I'm trying to be more as I go, as I do this. I have to be. Truth is so important, and I just want to be like literally the trader, guru, personality, whatever, who is just going to be brutally honest with you about the challenges and the psychology of it, because that's what a lot of people don't talk about. I had somebody yesterday I was talking to. He asked me, he was like, "Yo, like, I know you got this options class coming up. Cool. Are you just teaching strategies, or like, are you going to like, do you guarantee?" I was like, "Bro, you could come to my house and trade with me. Put your computer next to mine, trade the exact same thing I'm trading, and still mess up every time. You're not me. Your psyche's different. The things you've gone through are different. Your relationship with money might be healthier, unhealthier than mine. I might just be more confident than you. It's not just the technicals and, oh, draw this line and use this indicator. Like, we think it's that, and it's not. It's a deep, deep, deep belief in yourself. This trading journey will expose you to you. And some of y'all are not ready for it, will not be successful, will never be successful, don't have the aptitude, the discipline, the drive, the patience. That's reality. It's reality. It's not for everybody. It's not. But for those who want to see if it's for you, the only thing I can do is be honest as possible with you. And as a coach, educator, try to give you things that I know that work, that matter, that I use, that are proven, that are math based. You can't. If I'm telling you that if I went into right now a deep dive into Bollinger Bands, if you understand statistics and the math behind Bollinger Bands, you can't argue with me. You can't argue with me. It's math. It's not my math. I didn't create math, right? So some of these, and everybody has their own, every guru, every, personality has their own style, all that stuff. Cool. I get it, man. Make your money. I want everybody happy, thriving. I want that for everybody, but there's a cost. There is a cost. And I'm not talking about the cost of a class or the cost you pay for your alert service every month. I'm not talking about that. I'm talking about the sacrifice, the time, the energy, the alignment to say, this is what I want for my life. This is how I think I can use this trading thing to benefit my life, my family. But what's the cost? We know there's rewards. What's the cost? What's the risk? What do you have to give up to gain? That's where we should go. That's where we should start all of these. Everything. There's so many, and I hate to say this. God, I hate to say this, but I'm gonna say it. In the Black community, because of history of slavery, Jim Crow, Reconstruction, because like we really are a first generation of people. Like my mom and dad didn't teach me nothing about options trading. Like my children, whole different mindset because of what daddy learned and what daddy does, right? Many of us are first generations of wealth and aren't even wealthy yet. Many of us are trying to get there. Trying to get there. And we have to talk honestly about what it takes to get it, because nobody's going to get us to you. Nobody's going to get us to you. Just because I give you a winning strategy, if deep in the core psyche of who you are, you're not a winner by like mindset, you're going to lose. Losers can take winning strategies and lose. And I know that might offend you a little bit if, winners, losers. I mean, mindset. Winners are going to win. It's why you see people like Jordan playing basketball. And then he goes to do baseball. And then now it's like, man, he's in the golf, right? Why? Constant challenge, acceptance of it, right? An acceptance of the pain that comes with trying to get that glory of a win. And then repeating that one win you get over and over, thousands to hundreds of times over and over your lifetime. Everybody doesn't have a winning mindset. You need to read Winning by Tim Grover. Matter of fact, let me play this clip real quick before I get into it. Play this clip real quick. I love this. Tim Grover, he essentially was Michael Jordan and Kobe Bryant's personal trainer. Never played in the NBA, doesn't have 15 rings. He's not the world's greatest, but he coached the greatest. Right, here's what he said about winning. This is such a powerful quote. Here's what he said about winning.
Winning is not about the trophy and the accolades. It's about the grind. It's about the obstacles. It's about the challenges. It's about the pain that you endure along the way for that 30 seconds of being able to either stand on the platform, be acknowledged by individuals that are close to you. But when that happens, your mind has to immediately shift back, because now you felt and tasted something that you could only get through winning.
Only.
Are you willing to do it again?
You've tasted something you can only get through winning. Oh man, there's so much I be wanting to say in these. I'm gonna speak to the men for a second. Ladies, y'all can listen in. Men, I'm gonna hone in. Men, masculinity, the experience, the lived experience of being a man is to challenge yourself through and beyond adversity. Everything about us, everything about a man is to build. It's not your looks. Women don't. You like you could be a amazing looking dude, great, but unless you build something, your looks might get you. You know, you might attract some women off your looks. That's not sustainable. You have to build and become something of value, a man of character. You have to build something, and I don't know. It's such a perfect metaphor, but everything in life that you want to build takes time, sacrifice, sweat, blood, challenge, and everything's competitive for a man. I don't think women can even understand how competitive our world is. We compete for everything, for resources, for money, for women, like every single thing of value we value. Nobody's gonna give it to you. Everything is a walking competition. Everything's a market. Right? It's the metaphor for all of this stuff, right? And why do I go to manhood? Because if we start talking about like masculine versus feminine energy, right? And think, and for me, I think of God literally the essence of what is best about masculinity and manhood and woman together, right? I don't think God, like, he's not a man, he's not human, right? He's a spirit. We just refer to him as father, right? For kind of like order and establishment. Okay, cool, right? Some of y'all got a problem with that, but hey, that's on you. Um, but this journey, you look up masculine energy, it's direct. It's independent, it's not collaborative, it's logical, not emotional. It's just literally just look it up. Look it up. You'd be amazed if you just look up the definitions for masculine and for feminine energy. So many of these masculine traits directly relate for me personally to what I feel like it takes for you to really become even a decent trader. Because there's so much psychological stuff happening, and you have to press on. You gotta press on. I know people who have struggled with trading for years. Most traders, probably by definition, are not consistently making money. That's the graduation, and that takes years for most people. Consistent money, whatever type of money you want, that doesn't come like fast per se. Even these last 2 years, I'm gonna pull it up now. Pull it up now. Let's go to Let's look. Oh, matter of fact, hold on. Before I do that, I got to say some shout outs real quick to some people. Oh, if you're watching this live, you can type in comments and interact. All right, so I can pop your name up on the screen, give you a shout out. You know what I'm saying? All that. My guy Christopher John said, "Yo, what's up, bro? Glad you're watching." He said, "Can you review Nasdaq and S&P, bro?" I always start with Nasdaq and S&P. You ain't gotta ask me that. You know I'll start with Nasdaq and S&P. We gotta start with the broad market. My guy Remus Woods, that's my cousin, even though it's not my cousin, but we probably cousins. What's up, bro? He said, "What up, Woods? What up, Woods?" Somebody said, "Yo, can you take a look at Google?" Definitely will. Somebody said, "What's good? What's good? What's good? What's up? What's up? What's up?" So feel free to ask questions as I go. Let's see what I want to do now, though. I'm gonna bring up find it real quick. So this is the S&P. It's a good old S&P. Oh, matter of fact, let me change my chart real quick. Hold on, because I wanted to make sure when I went back, I try to go back and watch these and make them a little bit better every time. But I realized I'm like, the green and red. I need to make the green and red a bit more, the contrast brighter. So there we go. Okay, matter of fact, so let's do this. Let's do this real quick. I'm actually going to go to the month chart. And I just want to go back for a second. Just for a second. Look at that. What is this? What is this period right here? Here's what's interesting about this period. I always start because I can run back in time real quick. .com bubble bursting. Bam. 2000, 2001, 2002, 2003. This was that move back up. Where did we go? Same exact highs, about 155, just say 160 on the S&P. The recession. We're in a recession. It hasn't gotten bloody bad yet. A lot of people don't want to call it a recession. I've even seen people trying to change the definition of recession. All kind of stuff. Here's the beauty. What happened during the last recession? When it got really bad, right in here. Let me put a little box right in here. This was kind of like right in here, these couple months. This was like, we're either going to, this is a pullback and we'll be able to go back higher to these highs, or this is going to fade. We are going to break and we're going to go to the next major support, which was way back here. That's all we did. Right in here. It was like 1, 2, 3, 4. And then we had 1/5 really bad month. Ew. We're basically right here, right now. This is where we are. This is where we are. Big drop. Trying to push back up. Couple months in there, and then oh no, and then it got really bloody, right? Really bloody and bad. Now the cool thing is, you knew where the lows were if you had the knowledge. I didn't have it at this time. All right, so just as simple as I just drew this support level, I didn't know that right down here. Oh, at 75. Oh man, buy everything. Buy everything. Now there's a few other reasons, right? So I could probably go through 20 indicators telling you, giving you a sign that, but just off of basic support and resistance levels, which is a concept that you got to learn. You know, you have to learn. You don't necessarily have to learn it and be all super masterful with support and resistance for investing per se, but I think it definitely helps with your investments as well. Why? Because if you would have done this, you could have said, man, okay, the recession is bad, cool. All right, but 3 to 4 years after the worst drops in history, 3 to 4 years later are the best gains. All right, I put on something on a reel up the other day, and I said, man, I keep seeing these gurus, so-called self-proclaimed gurus, saying, hey, you know, like if you're worried about the recession, you're worried. What you probably need to do, you know, you need to start thinking about companies like Dollar Tree. And I'm thinking in my head, if you're getting out of Apple and actually solid stocks because you're fearful and you don't know how this works, and you're trying to save what you might lose by going to a company like Dollar Tree. Here's what they don't tell you. If you start investing in Dollar Tree right now, when do you get out? These little reels and all this content people have put up, and I get it. We market, we put out content. I get it. I just sit back and I watch some of it and I'm like, it's more to it than that. It's more to it than that. I hope you're not listening to everything you hear from everybody who seems to, you know, even me. Don't even listen to me in the sense of if this is your first time watching. Don't just take everything I say like gospel. No. Do some research, listen more. Just sit back and watch. Do all of that. Take it in. See if, you know, there's some consistency in the message. All of that stuff. See if the stuff that I say actually kind of plays out and works. And like, am I basing it on statistics and principles, or is it just me and my ego? You know, what you'll see on the chart is this. After we bounced off that support level, we basically have had the most amazing. Let me actually clock it. In the sense of clocking, I wanted the percentage from the low of the recession, S&P till now. Actually, I'm sorry, to the highs of post-COVID highs. Last year, what was it? What month was that? I can't see my month. Wait, hold on. That was a 610% return. We're talking about January. Yeah, January of this year is when everything started coming down. November got a little rough. December was like we were kind of ranging inside of November, and I'll show you this real quick. And then January, nice strong drop. Ooh, kind of okay. And then I'll kind of show you a little more detail. But look at this. Like look at this. This is the last 20 years. Bubble bursting. .com bubble bursting. Oh man, terrible. Market rallies. Where did it go? It went to the exact same place it went. You should have been paying attention. You should have been paying attention to that. Recession happens. Right in here is where we are now, based on indicators, kind of just market factors, I would say. I would argue it with anybody in the world. All right. We're here. This can happen. This dip here, this is what everybody's worried about. But we're here right now. We're here. We're not, right? So we're not in this painfully ugly people, jumping out of windows, committing suicide, companies, banks closing. We're not there, but we could be there. I hope we don't go there. Right? I hope we don't. If we do, right, then where was the last major support level? Same thing that happened back in '08. Where's the last major support level? After this 10-year bullish run, where's the last major area of support? I got a video I put up where I kind of walk through this very methodically, meticulously. I told you down here around 240, 250. If things get worse, if worse comes, that's where we're going. Percentage wise, it's the same percentage return. It's the same place where most of these buyers started this move up, and it happens all the time. Like that pattern of market lifts up, we take all those gains back and go to where we started. It's normal. It's normal. You just don't look at these long-term month charts to see the full picture. All right. So let me jump in here and go to a week chart. So that's that high, clearly 479 on the S&P, called the spiders. Yeah, for those that don't know, you're not like deep into this stuff just yet. If you ever hear me say spiders, SPY, S&P, I don't know what I guess because it's SPY. It look like spiders, whatever. I don't even know where the term per se came from, but right. So we had a lot of right in here, a lot of congestion. During Christmas, we tried to go higher, couldn't. Right in here, early in January, my indicators, the technical tools that I use said, "Hey, yeah, we're about to, very strong chance we're about to go into a downtrend," and then we did, made a new low. We popped up here. There's a reason I got this little yellow circle. I'm gonna tell you about it in a second. And then we had a really strong drop for 7 weeks. All right, little attempt at bulls going higher, and then we dropped. Where are we at right now? Where are we at right now? Where did we just go? To this exact same high. So we're not out the woods for those people who, are still primarily bullish. And if you're long term, you're basically a bull by nature long term, because we people go to work to create value. Nobody goes to work hoping that their company fails, right? Millions of people go to work every day to create value for companies. Value. All right. So by definition, as an investor, you're bullish. By definition. All right, with me. Let me check the comments real quick. Somebody said, "Hey, Noble, hey." I don't know who that is, but hey, what's up? Somebody said, "What about SPY? Can you bring up the SPY?" Oh yeah, I'm on the SPY. Charles Holland, what's up, my guy? He said, "Spiders refers to Standards and Poor's Depository Receipts, or SPDR." That's right, SPDR. I just keep thinking about just the ticker SPY. Perfect. Thank you for that. Let's see, Douglas Blake said BAC. Yeah, I got you. And we'll talk about BAC too. I probably should say at this point, this might help. I probably should say that a lot of my analysis, because I pay attention to kind of what's out, you got to pay attention to what's out there. There are some people who if you spend all week reading just tons of articles on every company, you'll sound like a master guru. You'll be super intelligent. The internet is full of information for people who love, right, to kind of understand more fundamentals and what's happening. On this show, I actually, like, if you pay attention, I don't spin or go per se too deep with like a lot of the context behind what the company's doing, because while that does matter, and I think you definitely should know, you need the technical side, which is, pulling up a chart, the pricing, these pricing patterns, mathematical tools used to help you to kind of predict, see what's happening, patterns that just play out all the time and do the same thing over and over, which is why I started with, the S&P doing that bounce, going back to those same exact lows, and then kind of showing you, if we get a 50% drop, where are we going? Back to the COVID lows, which can happen, right? Which can happen. But you should still know some fundamental things about the company, what they're doing, and their actions. Definitely. But what I love doing, what I focus on, my specialty, is getting on these charts, right? To some degree, me personally, to some degree, I almost, I say this with a caveat. All right, but on some level, I don't really care about reading 55 articles about the company. Price is price. Every time something goes from a downtrend into an uptrend, mathematically, the same thing happens on the chart, whether it's the 1 minute, the month, the 5 minute. It's math. All right. So I do have to say, when you're watching my show, you're gonna get like a primarily technical analysis. Just so make sure I say that, because I think sometimes we look for like, are you gonna kind of, talk about the company, what the CEO's doing, all this different stuff. And I'm like, yo, here's what price is. We're in this trend. This should probably happen. You're like, you can go find all that information. That's great. But what is price doing? Right. So, and it's how I was trained. One of my mentors a while back was actually a head trader from Merrill Lynch. Head trader from Merrill Lynch who trained professional traders was a mentor of mine. Watch this dude trade every day. I couldn't even understand what he was doing. It took like 2 weeks for it to click what he was even doing at a base level. Learned a lot. Learned a lot. All right. So I've had, luckily only had a few mentors, but God is good. I get blessed with people like that. So let's see. Somebody said, are we going to touch on Noble's true range this live? That's a great question. Dang. So that's cool. That's good. I could tell you watched the last one. So let me think. Do I want to do that today? Because I hadn't planned on it. Let me think real quick. I know I want to show y'all this with the VIX. Maybe not. Maybe not today, just because I hadn't planned on it. But don't worry. Keep watching. Y'all know. These little things that I create, concepts that work for me, I use every day. So it's not like I'm going to forget. Love the reminder. Matter of fact, maybe at the end I'll try to do one. Maybe at the end I'll try and give a little sneak peek. I'll come back. John Song, you said, what's up, Noble? Building a long-term portfolio, and I'm underway industrials. Curious on your thoughts about RTX and NOC with geopolitical tensions rising. Great question. And this is one of those questions I kind of mentioned a little bit. So I'll pull up those two. Where we are geopolitically is very interesting. It's very interesting. And I'm not like super deep into like international politics and what's happening with like for some people, like why was Nancy Pelosi going to Taiwan? Why was that so like, why did China start testing, shooting rockets up in the sky? Like, why did that happen? All right. I'm not like, I don't live heavy in that world, but of course I'll do the research in A, B, and C. So I'm gonna pull it up. I probably won't have a ton of commentary per se on the political aspect. And I know that matters. Of course it matters. But let's look at RTX and NOC for you. Let's do that. So I'll do that. And I got a list. So I'm gonna try to make sure I don't skip anybody's stocks. I hate when I do that. Make sure my phone so I can see. So let me go back here for a second. Downtrend, basic classic downtrend. How much did we drop? Let me tell you that real quick. I'm using Thinkorswim, which is owned by TD Ameritrade. I'm not doing a commercial for them right now. I know I went in like commercial voice. I'm just telling you what I use. Yeah, that's all I'm gonna say. That's the only advertising I'm gonna give them real quick. S&P had pretty much like a 25% drop. All right, from these highs to where we are now. Let me also do one other thing really quickly. I want to show you. The month chart. Matter of fact, do this real quick. I know my candles just changed. I know. Don't even worry about that. Right now in this moment, I can't like fully explain the indicators I put on the chart. I'm not going to try to. It's a lot of math behind it. I love teaching these. It'll take me 2 hours to walk you through the squeeze. Oh, Bollinger Bands. Oh my God. I could literally give you the most masterful workshop on Bollinger Bands. I don't have all that time, right? So all you need to know for this moment in time is this move here that clearly was the recession, strong downtrend. You see how all of these candles, right in here was the congestion. If you pay attention to this red line, this bottom red line, that's where it was like, oh, if we go lower, if we go under that, it's going to get worse. Mathematically, it's once again, y'all, math is a language. You can't argue with me. If we start talking about what's 1 times 1, you can't argue with me. 1 times 1 is 1. 1 plus 1 is 2, right? There's no debate. Your context doesn't matter. Math does not care about how smart you think you are. That's why I love that's why I love the technical side of this, right? Because it kind of gets the ego out of all of this stuff, right? And for me, it keeps me very logical and rational, right? What do you see? Where are we at right now? Where is price? The last 2 months are essentially right there, right? Right here on this same bottom red line. Let me go back real quick. Where were they here before the recession, before we crashed? Ranging right here. What are we doing now? Ranging in this exact same place, right? So trust me when I say, if we go lower, we're going much lower. I'm gonna say that again. If we go lower, we're going much lower. I'm not saying that to scare you. I'm just saying it to give you some insight. Right? And I'm always saying if, right? If. I'm not saying we are. I don't know. All right. And as I drew that box right around that range, right, you can see even on the month chart, all this is this entire what is this from March 5th, 5:30. What is that? May? No, January, February, March, April, May. Yeah, May. From May 30th, which was this week here until now, all we've done. Small dip from 420 down to 360. Everybody was like, man, can we get back to 420 back? Yeah, we hit 420. We're right back there, but we're just ranging. We're still in a downtrend. You can say we're reversing, we're attempting to come out of that downtrend. Yeah. And some stocks, like if I pop over to Apple real quick. Let me take this off. Some more stuff from a session. We look at Apple. Matter of fact, I look at Apple real quick on the day chart. We look at Apple day chart. All right. Oh, basic trend line. It's basic stuff. Look at that. Did we cross over that trend line? Yeah. Did we get some more volume, more volatility, right? More buyers, more people bidding the price up. Yeah. Did we? Yeah, we got a nice little run. This is Apple though. Most stocks don't look like that. Most stocks don't look like that. Right. So the apples of the world look really, really good. But if I literally went through really fast, top 50 in the S&P, just top 20 in NASDAQ. They don't all look like that. They don't all look like that. Apple's is one of the strongest in the world. All right. So take that with a grain of salt. Matter of fact, let me do this real quick. So before I get to your stocks, which I'm about to hit in a second, and I have some from our group Insider Trading. So Insider Trading is actually a group on Facebook that me and my cousin Joel started like 10 years ago. It's probably 30,000 people in it now. So if you're watching on YouTube and you're like, man, like I enjoy the content, seem to be a good guy, you like my whatever personality, who you think I am, right? Because everything, and I just say who you think I am because everything on social media is like perception, right? But I try to be as authentic as possible, of course. Then go to Facebook, type in Inside of Trading. You'll see the room with like these gold bars. It's kind of like these gold. We literally haven't changed the little picture in like 10 years. And join. All right. We do, great community, thousands of people, a lot of new people, some people, definitely making money. Most people kind of in the same place, getting better, learning, building the skill set, building themselves to be able to do this, more efficiently. Right. So we love for you to join. So join. It's free. It's a group on Facebook. So join. Or don't join, whatever. do what you want. But I also want to pull up real quick that list. There we go. Okay. Oh, okay, cool. So John, I didn't realize John Songi. That's a dope name, Songi. I bet people always asking you some lame question about can you sing or do you write songs? It's like when people with my name, they like, every time I say it's Noble, like, oh, are you Noble? I'm like, yeah, I try to be. Yeah, some people get offended when I say that, like I'm being cocky. It's like you asked me the question. My name is Noble, but I'm supposed to not be Noble. So anyway, John, I see. Oh, you asked me about a few. Well, you asked me about RTX and WM here. Same kind of question though. Okay, so I'll do this. I think you asked about RTX. And then here, what was the question here? NOC. Changed it a little bit. Okay, cool. No worries. But before I do that, I got a small list. It's not super long. Before I do that, give me 1 second, y'all. Before I do that, hold on. Turn the music back on. Before I got to do this real quick for those who are watching live. Just give me 1 quick second. I got to show y'all this. Where's it at? Oh, it's right here. Here we go. Hold on. Here we go. Okay, grab that. And let me do this real quick. Special little treat for you guys. See this? So it says join Noble's trading workshops. So what I did was insider trading this week on Sunday. I was like, yo, I got a class coming up. It's going to be super, super dope. I never try to sell people. I just let you know what I'm doing. It'll probably start September 19th, which gives you a little bit over a month to make a decision, put some money to the side. It's going to be super dope. It's going to be a 10-week options class. It's for newbies. I start with basics all the time, but to me, the basics become the advanced, right? And so what I'm challenging myself to really pull off, and I can, right? So it's not like really a challenge per se, but what I realize a lot of people don't know. Imagine playing basketball, but you only know how to shoot a 3-pointer. That's all you know. That's really all you can do in this Curry era. All you know how to do is, that's all you know is a 3-pointer. But you have no perimeter game. Your free throws are terrible. Passing, right? There are other skills, other ways to make money. If you only know one, you're very limited. Unfortunately, most options traders know how to buy calls and puts. A lot don't understand the selling side. Can't explain to you a vertical. If I start talking about debit, credit spreads, bull spreads, they really get lost, right? And if we start talking iron condors, straddles, strangles, verticals, back ratio, calendar spreads, what are those? There are other ways for you to make money using options. So if you only know how to buy calls and puts, what are all of these other things for? Right. So I want to I earlier this year was like, you know what, this next options class, I'm taking it up a notch. Because this is what you need to know. You cannot just know one way. You can't. Right. And having a broader breadth of knowledge on how to use options to make money, some people are gonna be amazed at how some of these strategies work. Right. And so that's where we're going. So this one's free. This is just a fun workshop, kind of testing an idea. I want to see if like in a good hour with one story, one really creative, took some time to kind of put it all together story. If I can basically give you the core concepts, right? And when I say teach, I don't mean where you can tomorrow start trading. No, it takes time. Once again, dreams of grandeur, throw that delusional stuff out the window. No, you're not going to learn how to trade 12 things in an hour. No. But will you walk away with a much clearer understanding of, okay, right? And more of a structured, what's the best word? I don't know. Just better understanding with how these different concepts are different and why. Some of them are directional. Sometimes the market is in a place where you're like, I don't know if it's going to go up or down. Maybe it's an earnings play. Maybe it's something coming out with news. I know a big move is coming. There's ways to check internal, intrinsic volatility. Volatility is high. I don't know which way it's going to move. Is there a way to use options to make money when you don't even know the direction? Yes. What if I think Apple will be in a much higher place in January, but I think right in the next month or two, we probably still might struggle a bit. Is there a way to like manage that? Yes. Yeah. Oh man. Anyway. So y'all know me, man. I'm an intellectual. And as an educator, I really do take it upon myself. Like I feel bad when I don't say feel bad, but I've always tried to challenge myself to teach you and give you what you really need. And when I look and think about even the options classes I've done, all the stuff that's out there, nobody really even attempts or promises that they can even teach you all of these strategies. So yeah, I don't care what class you took. If you don't know how to run a straddle or a strangle as easy as fast, if you don't get it the same way you get buying calls and puts, you're not even using you on the court just shooting 3-pointers. That's all you can do. All right. So I want you to be limitless. I do. Class is going to be called Limitless Options. But this workshop, you can sign up for free. Send a link to your friends, your buddies, whoever. Sign up for free. I'm doing 2 this weekend. I have a little pre-test, post-test. I want to see what people know. Go through this little fun exercise and then test you again and kind of see what people learned. And then I'll probably have some little, not GoDaddy. What do you call that? One of those survey monkey, little survey just to, get some feedback. So, yeah. Oh, where's it at? Dang. Let me see. I'm gonna try to post it in here. So, okay, yeah, that should have worked. Hopefully that worked. If you're in insider trading, you know where to find it. Okay, cool. Let's go back to the stocks. All right, hold on. Let's go back to the stocks. Okay, so just wanted to make sure I knew about that. And let's knock down these stocks. I ain't gonna lie. You know what? You know what my goal is? I'm gonna tell y'all the truth. Because marketing is warfare. My real goal, I want some people who have paid for really, really expensive $3, $2, $4, $5, $10,000 products claiming to teach you about trading and option specific. I want you to take this free little workshop with me and be like, man, I learned more with this dude for free than I did for this $3,500 class that I took. That's my goal. That's really the goal. I get high off of like knowing I taught well and you grasped the concept. You got something new. You walked away better than when we first encountered and engaged. So I'm a real, So okay, cool. My guy Dealey said about the workshop. The link you sent had it dated for September 17th and 18th. Oh, okay, so that's a mistake. It's not the 17th September. It's this weekend. So I'm gonna go in there and change it. Thank you for that. But yeah, it's this weekend. So still just go ahead and pick one of them. And I'll get that changed as soon as I get off of here. Okay. So let's go through your stocks. Let me see. Let me find. Actually, let me do one more thing real quick. I just want to hit the VIX real quick. For those that don't know, the VIX is the volatility index. What is that? It's essentially called the fear gauge. It measures volatility, specifically the VIX, the VIX. Volatility index is measuring. What the heck is it measuring? Actually, I don't want to take that off my chart. Go to the wheat chart. It's measuring 30 days forward looking options contracts, specifically on the S&P, because that is the world's benchmark for how the stock market is doing, not the economy, the stock market, right? So when the VIX spikes, matter of fact, let me give you this really, really quick. All right, see this spike here? This really, it went way up there to 85. What was that? That was when we had the COVID lows. People were so fearful that they were going to lose money. They were hedging their bets. Some people were buying calls, trying to ride it back up. Some people had bought puts because things were crashing and they just wanted to protect their long-term wealth. They were hedging, using all these different strategies. Once again, iron condors, calls, puts, the credit spread, all of that stuff, straddles and strangles, right? All of those different strategies being applied, right? But when you see the VIX spike like that, it gets over 35. Generally speaking, in an uptrending market, good time to buy. In a downtrending market, it still can potentially be a good time to buy. It's debatable because you're in a downtrend. So it almost flips. All right. But once again, to keep it simple, when the VIX goes really, really high, it's time to buy. Last time it went this high was the recession. All right. So when we hit these 80 spikes, man, just buy the best companies or buy the S&P and NASDAQ. or buy some calls and puts on something. I mean, buy some calls on something. Right? It's math. Like the patterns are there, it's proven. I mean, this is stuff people know. It's becoming more common knowledge as more people come into this world. Right. But for people like me, it's like, yeah, when the VIX goes up, yeah. Yeah, when the VIX goes up, that means something. Right. But you gotta watch the trend, right? So here's what's really interesting. Let me do this really quick for y'all. I think y'all will hopefully you'll get why this is like, oh wow, that was dope. That was dope to see. All right, let me do this real quick. I'm gonna disconnect these. Disconnect these. I'm gonna put the S&P over here on the right. So make this a clean chart. And then I'm gonna pull up the VIX. All right. So I want you to see the VIX next to see both. All right. So I know there's a lot on this chart. I know. I'm gonna make it clean. I'm gonna make it simpler for you. Ignore all the lines and stuff for a second. Matter of fact, you know what? Nah, I'm gonna keep them on there because I don't want to redo them. I'm lazy. I don't want to have to redo all this stuff later. So check this out. The reason that I had this little yellow circle here, 328, right? 328 was here, 328. This was when the VIX hit this lower bottom trend line. That's when everybody started shorting, and we had 7 really bad straight down weeks. Right when the VIX hit the bottom. Now, remember what I said. For those who know a little bit about the VIX, most people always teach it and talk about like, oh, when the VIX goes high. What about when the VIX goes low? Things flip in a downtrending market. So when we hit this bottom off this trend line, which was already there, literally months earlier, when we hit that bottom, there's a few more indicators I could put on here. But once again, I'm trying to keep it simple. When we hit that bottom trend line and the VIX went really low in a downtrending market, that's when you short the market. That's why we dropped here. It's the opposite. All right. Goes high buy. When it goes low, you sell. Because we've been in a downtrend. Slightly more advanced. Everything is not always in an uptrend. Right. Some of these things you have to kind of have to flip. Right. So let me show you this one other one real quick. Because I had it on here, which is here. All right. So where are we right now? Right now, we're again at that bottom trend line. And if you look at where price is, where is price? The exact same place, back to this 420 area. So what does that mean? I'm not saying there's 100% chance. I never will. But it's very possible, very, very, very easily possible that if the VIX starts going back up, to make that move to run back up to 32 to touch this trend line, all right, what does that mean? It means everything's going to come down. You can use the VIX to kind of play both sides. You can use the VIX to help you to know when to buy, when to sell what you bought, when to buy back after you sold. You can use it on both sides, bulls and bears. You got to think like both sides. All right. So that's some gems. I don't even know if you understand the value of what I just gave you. But if you dig into the VIX and look at these patterns, I'm telling you, it makes this whole predicting what's going on. Forget the predicting. Just look at the math that's working. Right. All of those spikes, those two yellow where I had those two, that's where the VIX literally, the last one, we hit that bottom trend line and we dropped for 7 weeks. 7 weeks. So you can use it in both ways. You can use it in both ways, golly. And let me just for a second, before I go to my what's the names, go to the stocks. This is why I have to put all this information in my head into classes. And it takes a lot of time and work to do that, but it's because in here in this environment, yeah, I can give you that really quick, but I can't like meticulously show you like every single piece that I would love to, because it takes a lot more time than the little 45 minutes we're gonna spend here. Right. So I got Charles Holland said, Jim. Yeah, man. You can use the VIX for both ways. That's the beauty of these indicators. You know what I'm saying? It's like you don't just use the VIX to buy. But that's what everybody teaches, or most of the stuff I've seen on YouTube across like literally last 10 years. I don't think I've ever seen anybody talking about when you use the VIX to actually sell or sell the positions you bought, or how it changes when you're in a downtrending market versus uptrend ever. And I've seen everything out. I've just, so, okay, cool. RTX. Let me go to RTX. Let me go back to a one blocker. Hopefully that was helpful. In fact, I know it was. Give myself a round of applause. That was fun. Okay, RTX. Looks like I've okay. Raytheon. Okay, so where I always start, as I now kind of get into looking at individual stocks that you guys want me to look at, I always start with a month really quick. Why? Because for me personally, if a stock does not complement, look similarly to the S&P and NASDAQ, if it does not, just let me go back real quick. If on a month chart, it doesn't remotely look this good, this healthy, this much money, this profitable, this easy, this strong of a trend, I just instantly be like, I don't know if you want to trade that. Right? Some of this stuff is just selection. There's thousands upon thousands of stocks and ETFs and leverage ETFs. There's so much stuff. But the reason everybody pays attention to the S&P every day for the rest of our lives and always will globally, the reason this one thing is a benchmark is because if your stock, if its beta correlates, right, is a positive number above 1, maybe not too high, because if it's like a 2.5, that means S&P come down 25%, your stock might drop 80%, right? So you want to be careful not having stuff with too high of a beta, because you got to be able to ride that ride, which is going to be rough, right? It's more volatile than the S&P. But in general, if it's not in the S&P in great indexes, which means kind of the whole world is investing in it, I've just from day one always kept it real simple. Right. So these are just like guiding principles for me. Right. So I got to say that before I go back to RTX and all these other stocks I'm gonna hit. So, and I know most of the ones I'm gonna look at are probably in the S&P, but still. Right? Okay, cool. So we know S&P just made a little 25% pullback. Let's see how much RTX just pulled back. Just getting some comparison. Okay, 17%. Okay, cool. So instantly, I know S&P pulled back 17%. All right. Instantly here, see a 17% pullback. That's less. Right? That's already like, okay, positive. Good. If it was 45, then that's telling me its beta is fundamental numbers right there on Yahoo Finance, all these basic free things. What is the beta? The beta's there is telling you speed, volatility. Volatility is how you make money, right? So you got to at least know beta. If I don't talk about nothing else fundamental today, you got to know what the beta coefficient is. All it is the speed. If it's above 1, it's matching equal to as fast, fluctuates as volatile as the S&P. S&P up 20%, your stock got a 1.0 beta, it's probably going to be up 20% too. It's going to look just like the S&P. S&P drops 20%, your stock going to drop 20%. Beta 1.5, right? It's going to make you more and lose you more. Beta of 2, that's the Teslas of the world. Ooh, Tesla will kill the S&P, but when it's down, Tesla can hurt you if you don't know what you're doing, because it's volatile, it's fast. The pricing fluctuations go up and down deeper, right? So let me go to the week. I like to go to the week. Should I do this? You know what? I will. Whatever. Okay, so we're kind of here. I'm gonna just put this little range, right? So y'all know me. I'm big on ranges, man, because it's just like when you see them, it's telling you, one to Paul. It gives you a couple different options, but generally speaking, the ranges which happen to me as a day trader all the time patiently make me wait until there's a breakout, right? So I mean, it happens on everything. These are the week charts, but clearly we're just ranging, right, between what 88, kind of 88, 96. We had this little poke outside of 88, right? As a matter of fact, it's this candle here. It's this week here that we really haven't been able to get above. We tried here, came right back down. Didn't drop though. Pushed right back up to the same 96.8. Ugh, couldn't. Still just bouncing off 90 now, right? So it's consolidating, it's tight. I just need to pull that up to see if you're familiar with the TTM squeeze. This indicator on the bottom has those red dots. Generally speaking, the red dots down here, they're essentially kind of saying like, yo, we don't have any gas. We're not going anywhere. We're not really about to trend. We're just going to chop around. We're going to take bulls and bears money. There's no trend you shouldn't expect a trend just yet. And it makes perfect sense because as you can see, price is ranging, right? So that's why the technical analysis is important. I could use the TTM trend to just tell me some information about volatility. It's tight. Bollinger Band's really tight. If you don't know what Bollinger Bands are, you got to Google it. Google it. It's just standard deviations, a little math, MBA level stuff, but not really. Right? It's just price is tight. Nobody's putting a lot on it. Right? We're just kind of 96 to 90. That's all. 96 to 90. Right? Nobody's pushing. No bears nor bulls. In these ranges, a lot of people get chopped up and lose money because you don't know that you're in a range, which is why I'm so big on making sure you know you're in a range, right? So. Unfortunately, this one is kind of loaded. What's the best way to say it? Based on the technicals, if I had to place an educated guess, I would say that we would go lower. All right. Now, here's a good thing, though. Here's a good thing. Say that with a caveat. Here's the good thing. The good thing is this. I mean, if you look back here, all right, this basic trend line, we're trying. All right. And if we go lower, if we break under 90, we get a weak candle that closes under 90. I mean, that's not perfectly under here. Definitely, we get down to 85. We're going lower. Where are we going? Well, we're going back here to 80. Somewhere down in here. Because that was the last place we had some consolidation. A lot of people were buying in there, going back and forth. We had a good month, kind of struggled up in there. All right. Price has memory. We go back to those areas. All right. So it's consolidating. It's a little bit tight, which makes sense with clearly what's going on geopolitically. I'm not going to try and act like I'm a CNN anchor and walk you through what dang, wait, where'd it go? Walk you through too much of that context because it's still developing. Yeah, we'll see where it goes. I'm not gonna try to once again act like I'm the most versed in geopolitical tensions. But I think what you see with the stock perfectly correlates. So I would probably say this. If things get worse, some news develops that does not ease these tensions, it makes perfect sense to me that this stock would go lower because it's tight, it's ranging. We got to get above 100 or below 90. It's just time. 3-4 weeks from now, we'll know. We'll move either way. All right. So that's right there. Let me find my. It's right there. Let me bounce around a little bit just to kind of cover more people's stocks. I know you had two, John. I know. I'm gonna do one. I'm gonna do like everybody's first one and kind of come back, just because I want to give some more diversity with going through. All right, so AMD. Let me do AMD. AMD. Old stuff on here. Let's see. Let me go to the month really quick. Bullish flag. Look at that. Ooh, that's a range for you. Y'all know I want to say it. I'm not gonna say it though. That's a range for that. You know the rest. I ain't gonna say it. This was back. What was this? August the 20. We didn't get out of that range until July of 21. That's a year, y'all. That's a whole year. That's a year, right? So once again, ranges happen all the time. 1 minute, 5 minute, hour, 4-hour, day, month. Right? We can range for a whole year and not really actually. Right? A range is the antithesis of trend. It's not a trend. It's just we're hitting the same highs and lows. We're in a range, right? So we got that breakout and then clearly got a real strong move. So it's good that this was the next stock because I just want to think about that, John. Connect this picture back to what we just saw with how Raytheon is just kind of ranging right now, right? With these tensions. And with real quick, I just pulled it up, but with volatility leaning a little bit toward the downside, even though it's technically it is bullish. It's right there at that trend line, that very bullish trend line. AMD. Let's see, how much did AMD drop from these highs? Let's check that real quick. AMD came down about 57%. That's pretty much twice the S&P. So you instantly should be able to real quick calculate what is its beta coefficient, right? If the S&P came down 25% and this is down 50, it's basically double. It's like 2. Right? I don't know exactly perfectly what it is. And usually those betas are like a 5-year, going back measuring 5-year betas. You could do a 3-year beta, 1 year. You can do it 1 month. Right? It's just math. But generally speaking, if I say beta, I mean the 5-year kind of classic sort of standard, right? So what is that? 56% drop. Let me go to the week chart for a second just to get a little more clarity. A lot of these stocks, honestly, are all gonna look the same. I know they don't, kind of to the newbie or the naive eye. To me, they really all look like the S&P, which is why I always start with the S&P. Strong dip. We found a little support. Let's see. We got above. If I'm looking these matter of fact, let me go back here. I'll go back to a clean chart. I'll do it this way. If I go here. All right, so right here, we tested this trend line, dropped back down, made a new low. We got above it. Strong close above it and a continuation. All right, so let me mark this off real quick. All right, you need to always pay attention to these, right? Trend line break doesn't instantly mean it's going to make money. Preferably for me personally. And if you're real patient, you ain't got to worry about these little breaks because it doesn't mean that the stock is bullish. It just means that it's trying to reverse. Now, sometimes it does, but we're in a downtrend. So breaking a trend line in a downtrend does not instantly mean you're in an uptrend. It means that your price is attempting to reverse. Bears are kind of, easing up on the pressure. Bulls are getting a bit excited. It doesn't mean bulls are running the market, right? You got to know this stuff. So, I just put break and trend line. Okay. We broke it there. And then here, I'm going to just put CONT. Got a continuation, which literally just means what it sounds like. We continued. And we got more buyers. That's a really good sign. It's a good sign. But we're not out the woods. It's not bullish. Still bearish. Attempting to make a reversal, right? I would say classically in a reversal period. Right. So now it's almost, think about it like this for a second, y'all. At some points, it's like, are we bullish or bearish? And we're 100% bearish. Please don't think we're bullish. We're going down. We're going right. It's like, and then those percentages change, right? You get to a point where it's like, oh, it's 50-50. We could go up or we could go down, right? So right now with this one, with AMD, now I ain't gonna even mention, some of the fundamental stuff I do know. I want to kind of keep it technical because I like really giving y'all good technical insight. But when these reversals happen, it's that 80-90% chance that price continues to go lower. It's that lessening. All right, it's that lessening. That's still not saying it's like we're not at 50-50 yet, though. We're not even at 50-50, right? This right here is more like bulls. Bears 60. I give it 60-40. Probably more so like 75-25. Just because where the S&P is, which is why I started with the S&P. Right. And this is more volatile than the S&P. AMD is more volatile than the S&P. And I already showed y'all we're right now in that very specific place mathematically where with every major recession, every time the month chart gets there, if we go lower, that's when the month chart establishes a downtrend. To a trader like me who's very technical, A recession is nothing but a downtrend on the month chart. If you can identify a trend, you're good. You'll know how to manage anything, right? But the reversals are where people struggle. Most people don't teach, talk about. It's easy to see a trend once it's established. What's really hard is that change from bears are at 75%. Oh, bears is 50-50 now. All right, and then we might dance around there for a minute. All right, you really just don't know. We don't have enough of a catalyst for either side to win. And then it's clear, new high, higher low, higher high. Now 75% bulls, 20% bears, bullish market. That process, though, that don't happen overnight. That don't happen just because we break a trend line in a week. Nah, takes time. Unless you trade on the 1 minute. If you trade in futures on the 1 minute, yeah, you might go from uptrend to downtrend in like a good 15 minutes. Like it'll happen real fast, depending on the time frame. John Songy says, thanks, bro. That was super helpful because I can't figure out what's going to happen with Taiwan or Ukraine for that matter. So this really helpful on the stock. Dope. Awesome. Glad I can be helpful. For sure. Glad I can be helpful. So who is this asking me about AMD? Oh, Ty Wilson. Miss Ty Wilson had asked about AMD. So yeah, some percentages there. Charles, let me pop that up. Charles Hollison, man, QQQ and AMD is all you need. The good thing about QQQ and AMD is, you know, I generally, I actually like, I mean, I prefer NASDAQ more because, I think generally speaking, it's kind of, I mean, definitely from a long time perspective, it outperforms the S&P, right? Higher percentage, higher chance of you making money. I don't say higher chance of making money, say that back. If we just put some money in it every month for the last 20 years, you would have a higher return, right? With NASDAQ, tech stocks, this is just the industries that are in there, right? Whereas the S&P is more broad. But yeah, if you follow NASDAQ and the S&P, if you could just get really good with knowing those charts, just that, you kind of get a picture of the whole world anyway. Yeah, so once again, that's why I always start. I'm gonna tell y'all my secret. If I have no idea what the stocks are that I'm going to look at when I do these lives, it doesn't even matter. As long as I start my analysis, and of course I'm connected to the market because I trade the S&P future, so I always know what's going on. But if I don't know those specific stocks or that industry, or I had no idea about this geopolitical whatever, doesn't matter to some degree. Why? Because I still started with the benchmark, the broad based benchmark of the stock market that the whole world pays attention to, right? So great point, Charles. Some people I think can keep it really simple. You have to track and know what the S&P or NASDAQ is doing though. Right? You got you, right? So don't, and anyway, I'm gonna keep it simple. I was about to say something. Let's go to AMC. Lakeisha asked me to go to AMC. AMD, let's go to AMC. All right. So meme stock land. Man, let me do this percentage real quick. This percentage drop. Now it's different, right? This has no correlation directly. You could argue that AMC legitimately is not a good company. I know we love it. If you love movies, there's an affinity for it. There's a passion. You like, oh, I want it to succeed. But if we go back before the Reddit, traders got the chance to do their thing. Matter of fact, let me go back here. Right. If we go back and look before that, what do you see? You see downtrend. Classic downtrend. Look at that. I connected this line here and here. And when we popped up to test that line, which was drawn years earlier, right here is where you should have bought some puts. Wow, the trend was down. All right, you see that? See how simple that was? Like right in here is where it's like, check the VIX, look at some news, put the TTM squeeze on there, few other things. And then once again, this is why that workshop I'm doing is so dope, because if you're like, the puts are really no, because price pushed up, so the puts would have been cheaper, right? If you're like, I don't know, just say for some reason right in here where I'm talking about, you looked at the prices on buying some puts and they were just out of your budget. They were just, when we got up here to 7.5, they was, even though that's low, right? So it's probably cheap, but still, let's just say for whatever reason, just out of your budget. How else can you still take this directional trade expecting price to go right back down? All right. What other options, strategies let you do that? All right, you gotta know this stuff. Right? So that's why I'm doing the workshop and then the upcoming class, which is gonna be a 10-week live joint. So this was that crazy 2 weeks where folks buying and playing this market manipulation game, sort of back with Wall Street and these hedge funds that were short, heavily short. What was that? 1,700%. Matter of fact, let me go back to this low. I go back to this low of $1.91. That's a 3,800% return. 3,800% return, right? So clearly that's why we still talking about AMC, because so you should see this downtrend, right? It's had some struggle. Actually, erase that. Erase that it's had some struggle, because honestly, here's the funny thing for me. These crazy to amazing, for those who took advantage and were in earlier weeks, we're technically still inside of these 2 weeks. Right? And what did we just do? We just came down to the bottom of where we started. Right? So this same stuff happens all the time. We had support here where we bought, where we started the move. Is generally speaking, I'm not saying this is a perfect science. I'm not. So take that with a caveat. Matter of fact, I need a little disclaimer. I need to put up a little disclaimer so y'all know. So let me say this real quick. Everything you're getting here is entertainment, edutainment. I am not licensed in any way, shape, or form to give you whatever the legal term is to consider this like financial advice. All right. I was just like you. I was working a 6-figure job. I got into this. I took it really serious. I started day trading futures. I figured I could probably really do this. It made sense with the personality that I have. I love intellectual pursuits. I'm not afraid of the challenge. I'm willing to pay the cost, which was years of my life to figure this out and to learn it. All right. And I got a lot of things that I can teach you that you can Google a lot of this stuff, but putting it all together is so much. So once again, yeah, as a quick disclaimer, I'm not licensed, so just want to make sure you know that. But the charts don't lie, so yeah. That's why I'm always on the charts. It got to be about me and what Noble knows. Right? So we came all the way back to these lows. Where are we at now? Okay, broke over the trend line. Matter of fact, let me let me do it like this. So we crossed that trend line. Wait, hold on, I'm gonna make it bigger or better. Okay, there we go. It's a little better. All right, so across the trend line, had a little doji. 2 weeks, we were kind of like, what's going on? Got a nice pop here. If I go to the day, just to kind of see this up close. Matter of fact, let me just check something real quick. Okay. I wanted to know where the 200 was. This thick blue line right. Well, where'd it go? Thick blue line right here is a 200-day simple moving average. And this test right here. So let me put a little box up here. It tested the 200 there, and we tested it here. And then I'm gonna go back to a clean chart. Matter of fact, I'm gonna take all this stuff off. And I want to go back actually to a week. So right in here and right about in here, we were testing the 200 period moving average, simple moving average. You should know what that means. You should know. You should definitely get familiar with it. Even if you're just an investor, you're never, you're not trading options, futures, foreign exchange, whatever. Cool. Powerful for you to know. It's like long term health indicator. Below the 200, trouble. Anything just kind of bouncing above it, and this long Apple and all these great stocks, that I could talk about over these last 10 years, all that bullish activity is coming down, bouncing off the 200, going back up, bouncing off the 200, going back up. Right. So you got to know the 200, but you still need to pay attention to the 200, even when stocks go under it and things are like, because we tend to kind of only look at it as like a way to buy, as a bullish indicator. It actually would have helped you make some money shorting AMC, which was already in a downtrend. Some spike here for whatever reason. I don't know what happened, why it spiked up. Yeah. Doing the same thing here, but at least last week we actually got a close, that close stayed up. So I would say this right now in this moment. In this moment, I know you don't want to hear this. In this moment, it's still bearish, right? It has not established on the week chart. It has not established an uptrend. Let me say that. So when we talk about these percentages, remember how I said, like, as we go from 100% bearish, 0% bullish market environment, and maybe this is my thing. I need to coin this and call it something. Right now, right, we've gotten a reversal. So I still would give it 75 bearish, 25% bullish because reversal is the beginning. But we're not at 45. We're definitely even not at 50, right? 50 for me would at least be back above 35 where we've cleared, right? We've made like literally a higher high than the past high. I got to at least be able to say we're above 35 to give it that, me personally, right? So take that with a caveat. I don't know fundamentally what was the news or why it popped up this week. Whoever asked me this, you should know. Last few days though, yeah, I mean, we got a bullish push, some volatility kicking in. Yeah. But catalyst, time, patience. Is it bullish? No. No. Still 75-25. Still bearish. But we're trying, right? This move here, right in here, breaking across that trend line. Yes. Positive if you're bullish. Right. But the main trend is still in play. Let me see. Bruce Lamar. What's up, brother? He said ET, energy transfer. He gave me some specifics. About 1,000. Okay. He said he bought 1,000 $15 options calls and dated it out to 2024. So perspective. Told me to stop. Bought some options calls. Couple different ways you could play it directionally. Buying calls is probably the most premium way. Not a bad thing, but it's the way most people trade, not knowing. It's kind of like the premium, most expensive way to get in an options trade because we don't really know all the other ways that you can still make money and kind of manage the risk a little bit better, right? So I'm not saying that's bad though. I'm just educated. So he said he bought 1,000 $15 strike options calls and dated it out to 2024. So he's giving it time. Right, he's giving it time. What's the perspective of ET in the next 1 to 2 years? I don't have a deep perspective on the next 1 to 2 years. I'm gonna pull the chart up and do my thing there. I just didn't have time to kind of like dig into it. Look, sometimes I have the time to kind of look at some of these and dig into the fundamentals. But a lot of these that y'all give me, generally speaking, I'm not trading myself, so I'm per se not really paying attention to them directly in that way. You know what I'm saying? You pay more attention to what you have money in, right? I don't own any shares of this stock, right? So, what's your perspective? Currently around 11, been building since 2020. So let me take a quick look at Oh, man, let me check something real quick. Where is it at? Oh, ET. ET. Let me do the same thing. Right to the week. Oh, actually, let me go to the month. Make this a clean shot. Wait, hold on. Let me take some stuff off real quick. I don't know why I got all this stuff on here. Where is it at? Take these rollover lines and stuff off. And equities. Let me take these corporate actions off. Just clean the chart up a little bit. There we go. Like a clean chart. Don't have 85 things on your chart. Don't do that. Even if you do, if you don't think or swim, right, make your use this little bar up here. It's like the little shortcut. You should have different settings. That's like my my day trading joint. This is my kind of similar but has a really subtle change. This is a different one I like to use, a little cleaner. This is my naked chart. All right, this is my quarterly joint. This is my 1 minute chart. All right, so I'm using different things. All right. Versus having everything always all the time. You can have layers. You take one layer off. It's kind of the way Photoshop works. You don't put everything on at one time. That's the final picture. But you're using different indicators, So don't have 55 things on your chart. Don't do that. Okay, so let me see. So this is energy transfer. What do I see? What do you see? You should see this. All right, every time we hit these lows, we hit the same low. Interesting. I don't know what happened in here. What is this? This is 2016. I don't know what happened here, but wow, that's interesting. And you once again, you should have knew where it was going. Reasonably, reasonably, you had a little support here because we had a little range there for probably like a year and a half. But this was that last major low with a dip like this. You already know where it's going. It's going back to the lows. So anyway, but I know we're not there, right? So clearly, we're not there. Eh, I don't know what they do. Um, but um, hmm, okay, okay, I'll give it. Let me change. Let me change. Let me think about this a little bit. So um, because we're still under this major trend line, right? The macro and the micro, right? We're still under that. But here, right, if I go to the week, oh, that's what it is. Okay, there we go. I see it now. Okay. So here's what's tricky. This candle right here, this 1 week, which was 3/1, March 20th, we're still inside that week. So you got to go back and figure out what happened this week. Why was that week so bad? Why did it drop it from 12 down to 375? We've tested it twice. We've gotten back up to the high of that candle, but we're still inside of it. Now, the first time we hit it, we broke straight through, closed above. Okay, good sign. Right. So this is one of those that's a little trick. I mean, you asked me about like super long term though. You asked me, what you ask me about? You said you bought some $15 calls. Um, so here's a good thing. Let me say this. let me answer your question and not give you the analysis I want to give you. Right. Let me be specific. Let me draw a line. He said he has $15 calls. For those that don't understand options, right? It basically means he's betting or believing that 2 years from now, price will be above $15. Right? Above 15. The good thing is when you're playing options in that way, even if the stock isn't necessarily bullish, which this one is attempting to, but on a month is not bullish. I mean, we're getting some steam, but once again, we're really just inside this candle here. Which let me put that box back. The good thing, though, the good thing I will say, let me get rid of that. The good thing is that where you need it to go, you got a lot of time, and where you need it to go, if all we do is test this trend line, then that trend line is pretty much at 16. Right? So think about that. High probability that we're going to test that trend line. We have to first get out of this candle. We're close. We're getting there, right? And we're just kind of ranging right now. Just ranging a little bit. All right. Matter of fact, if I go back and throw the squeeze on, the squeeze is bullish, it's blue. That's a good sign. We're above the 20 period moving average on a month chart. That's a good sign, right? It's a really good sign. Now we're in. Oh my bad. Wait, what did I say? Oh, these are month charts. My bad. My bad. Okay, so this was March. So you need to go back on March of 2020. Oh, March of 2020. So that was when COVID crashed, right? So that's tough, right? That's like, man, they still have not yet gotten higher than the COVID, that candle that made that COVID low, because everything else has. But it's energy. I get it. Different sectors, they move slower. Whole different conversation, right? With energy stocks versus like tech and everything else, consumer durables, all that good stuff. Retail, your retail space. But if it gets to that trend line, which it has a very high chance, we are always trying to test that trend line. If we can just get above 13, yeah, it'll be at 15. I would give it a actually I wouldn't give it a percentage because then that's me giving you my opinion. I just think based on where we are right now, yes, I think there's a really good chance between now and 2024 that we can get to test that trend line, get to 15. Because the trend line is at 16. And right now, yeah, we're establishing, trying to establish some for real, bullish activity. Let me see. Christopher Johns, what did you say? Energy Transfer does a lot of natural gas pipelines. I've done some welding for them for the contractor I work for. That's what's up. That's dope. That's dope. Thanks for that insight. So, natural gas pipelines. Huh. I used to trade natural gas futures. I used to love natural gas. And then all the volume came out and I couldn't make no money on it. And I had to find something else. I used to love natural gas. That was one of my first futures loves, man. I had such a simple little strategy. When I first started, I thought I knew what I was doing. Oh, and it worked. It worked like all the time until we got a lot more volatility and then it stopped working. Right? Um, but cool. Appreciate that, Christopher. Appreciate that. Let me go back here real quick. See what else we got. Alicia, let me see. Which one's more fun right now to talk about? She asked me about NVIDIA and Tesla. Let me take all this off real quick. Let me look at NVIDIA. Let's talk about Tesla maybe. Mm. Go to the month. So this is a lot of chop. I don't love this, but this is what comes with, a Tesla, something that can move. Let's see. These lows are what, 6? We're back up to 900. So just there last in this range of, let me show you right here, this candle, month candle, just this candle right here, which we're still inside of. That's a $350 range. Right. That's huge. That's a lot of volatility. So with a Tesla, even though I go to these same, kind of month charts and start the same analysis. As a matter of fact, let me check the pullback real quick. S&P is what, 25 from here to here? It was 50. Yeah. And this beta is 2. Perfectly matches up. Right. That's how you can calculate the beta real quick. Just a quick comparison, right? To figure out, is this thing more volatile? Is it faster? Another way to think of it is like the S&P is like, I don't know. What's a car that can do like 100 miles an hour? Just your regular car. I don't know. A Camry, right? That if you push it, yeah, you can hit 100 and cruise at 100. That's its normal cruising speed, right? Fast as it's really kind of gonna go right at 100. That's the S&P. Tesla, 200 miles an hour. So for my car aficionado, somebody, I wouldn't even throw out one because I don't even per se know cars that well. Although I love looking at them like that. Like the more expensive, crazy. I ain't there yet. It's coming though. It's coming. So yeah, we're kind of in a range right there. If I go to the week to give a little bit more detail, you can see that a bit better. Down here, then you see another range down here. So we get right started with the month view. Looks like we got a range. Kind of okay between 600 and 950. Okay, cool. Go down to the week because I just want to see more. I want to add a little bit more layer to the story. I'm building context as I go from time frame to time frame. Some of y'all go directly to the day. Man, that's cool. You got to look at the bigger picture and then, come down to the small. Right. I mean, it's like dating. You ask about her, I'll speak as a guy. You ask about her entire life. I don't just care about what you've been doing the last few weeks. Right? No, you're trying to get to know this person well. If there's a sincere interest. So you go long term. Where'd you grow up? We instantly do it with people when we're trying to research them. Why don't we do it with stocks? Why we go straight to the day chart? It don't even make sense. It's not even the same. Like literally, it's that's a principle. You start with the bigger picture to get a better gauge of who someone is. You do the same thing with stocks to get a better understanding of what it is. All right. So we had a little range back here. What was that? That 516 week. Took us a while to get out of that. We've gotten out of that. Squeeze is still bearish. still under the trend line, broke above the 20, positive, did not even touch this top band yet. I mean, I'm probably gonna say the same thing here that I've said on any of those that classically look like the S&P. Me personally, 75% bearish, 25 bullish. All right, we had a few good weeks. We got out of that ugly. We didn't drop. Whew, we didn't drop and just crack 600 to go to the next lower support level. But we're not out the woods. Right? Out the woods. Oh, I should use that for something. Everything's coming out of me. My analysis, that'll be a good something. I don't know. I'm gonna use that. So, we still got to break 950. Now, if we get above 950 in a week or two, then my percentage is gonna change. Still not per se in an uptrend just because we break that and we get a little continuation, right? Still not in an uptrend. We're not developing higher highs. We're trying to make higher highs. Basics. You need this stair step to say it's in an uptrend. We don't have an uptrend. We're not. We don't have higher highs. All right. So once again, it's still bearish. Primarily, twice as volatile as S&P. Ooh, that's scary. Because where I started, y'all know where I started with all this. You know what I'm saying? Like the analysis. So yeah, hopefully several really positive good things can happen, so that we do not crack that month low and go into what we went into in 2008. Yeah. Let's see. Sir Robert Smalls asked me to look at SPY, Apple, and Microsoft. So I'm gonna look at Microsoft. Matter of fact, let me check something real quick. Oh, okay, cool. Oh, matter of fact, let me see. Check in real quick. Some people said, how do you approach? Somebody said, how do you approach splits? Like Tesla coming. There's a couple different ways. I don't know if we're talking investing or trading. I think it's great for traders. I mean, great for investors too. Anytime they do these splits, right? It's the value still the same. The market cap of the company still the same. Right? So, you're just getting more shares. It's like a Jedi mind trick. Even though that's not like a Jedi sound, right? It's a Jedi mind trick. They changed the prices, but the value's still the same. Okay, you said trading. Cool. If we're talking about options trading specifically, I love when stocks split because the price comes down. And because those contracts across the board, everything by definition, kind of by default gets cheaper, it's more advantageous to trade, especially if it has good volatility. And Tesla's so volatile that if you don't know what you're doing and you're not ready for those 2.0 beta swings, that speed, Tesla will make you a trader or break you as a trader, right? So generally speaking, I love when the splits happen, especially on the big, Amazon, Google's, all of these. Oh yeah, split again, please. Yes, split again. Right, because the core underlying power of the stock doesn't change. Everything is just a different price the next day. So it's almost like I got more money, even though I don't. Right, I just have more ability to to handle that volatility. Because that's the biggest thing with Tesla, right? It's like, matter of fact, let me look real quick. I'm gonna look real quick. Matter of fact, I'm just look real quick right now to give y'all a 2-second comparison on Apple versus I'm gonna go options real quick. I'll go a month out, just a month out from now. No, matter of fact, a week. Keep it real light, a week. And at the money strike, right now Apple's 164.92. All right, 164.92. The 165 calls are 197. So think about that for a second for those who don't know about options. Here's the beauty of options. The stock to buy one share costs $164.92. If I were to buy that contract, all it's saying is I believe price can get above and will stay above 165 by Friday, but instead of paying $164 per share, I'm only paying $1.97 per share. but I gotta buy 100. 100 comes in every case in the options contract. So it's $197. It's $200 for one contract. $200 for one contract, right? That's Apple. Tesla, you comparison based on volatility and price and volatility, right? One contract right now at the money, Tesla's 850 perfectly. The 850 strike is $1,970 to buy one contract for the end of this week if you believe Tesla is going up, right? So that's the beauty. that's the beauty of these stock splits, right? When Tesla does this split, that same contract that today for just once again that I just think it'll be up by the end of the week above 850, right? If I played that now, I don't. You gotta be careful with these little weekly contracts because you gotta be like on your technicals really, really well, right? The shorter time frame, the harder it is. More time you give it, easier options is, but they're more expensive if you give it more time because you're giving it a higher probability of winning, right? So the beauty of those splits is that that contract that's 1970, it's not going to be 1970 after the splits. Like right, if we did it, if we compared them kind of almost like same volatility X A, B, and C, just because the price is different. So that 850 contract, which I guess was what is it? What is it? A 3-to-1 stock split? Was it 3-to-1? Where's my calculator? Where's the doggone calculator? I'm gonna actually do the math real quick. I want to be precise. I could do it in my head, but whatever. 850 divided by 3. That's 283. Right? Which means that the actual price of the contracts are going to be lower too, which means now you don't need $2,000 just to buy one at the money. That's why we love stock splits. Charles Holland said Tesla moves like SPX. Don't sneeze. Blink and go to the bathroom when trading. Yeah, it moves. It moves. Somebody said yes. Ty said somebody said thank you for your perspective. Thank you. That's what I said, Ty. Thank you for your perspective. Yeah, no problem. Somebody said trading. Somebody said trade. Henry said, keep doing your thing, Noble. Yeah, man. Always, always, always. I love helping, teaching, educating. It's fun. And it's lifestyle for me now. This ain't just like, fun hobby. Okay, Tesla. So let me find it. Find it real quick. Where's it at? Oh, Microsoft, Netflix, Ford. Microsoft. Quickly. And I'm just saying quickly, not because I'm in some rush now, but steep little trend there, right? We kind of had this same all in here, just touch the trend line, new low, ranging. Okay, cool. We got above it, and we got a little bit of a continuation after we broke outside of this range on the other side of the trend line. So once again, I'm gonna say the same thing. I would back here, right? I would have been like 80% bearish, maybe 85, 15% bullish, right? Just with whenever you hit a low, that might be the low. So you always got to give it some percentage, right? I'm never 100% bearish per se. Well, no, I am. Sometimes I am. You do get where it's like it's clearly every single thing is like it's bleeding. Do not buy anything, right? Because you're just buying a little pullback dip for it to go back lower, right? Yeah, we're above the 20. Just touched this top band. Squeeze still bearish, but it's fading. It's yellow. It's not blue yet. So same thing. Yeah. 25% bearish, 75. I mean 75% bearish. Man, getting those wrong is terrible. 75 bearish, 25. Bullish. Attempting to reverse, or I'd say once again reversing a bit, but the trend has not changed. Right. And when I say that, all I mean that is this. They need an indicator that would literally just will pop these on your chart for you. So more people could just see this crystal clear. Right. Are we making higher highs or higher low or lower lows. We've been making lower low, push up, same low. Actually, lower low, push up, same area. Test the same area. Lower low, little pull up. Lower low. So yeah, we got a little bit above this area. Okay, that's cool. That's positive. That's nice. That's positive. If you're bullish, that's positive. But we're not, just not an uptrend. With all these other impending factors weighing on the possibility that that uptrend that we all want may be further away than we think. Or it might be closer. We'll see. I don't know. I can't predict the future. Nobody can. Forward. So we're forward. So check out forward. Somebody must have asked me to look at. I don't know why I got this alert way up there. Downtrend. Range down here. Broke across. Got a little continuation, touching that top band. Positive 1, 2, 3, 4, 5 weeks. 5 weeks of growth. 5 good weeks. I like it. I'm not saying I like it enough to be bullish because I'm not. Right, not yet. And I'm just, once again, classic definitions with all this stuff. All right, so just like where I started with the S&P, downtrend all year, some ranging here, the VIX spiking 32, 36, right? I know some of you guys as long-term investors are buying some of those dips. Yeah, I get it, right? And I'm buying monthly. I'm buying a little bit as well, but it's not like I'm still very clear of where we are. Yeah, still very clear where we are. All right. We're not, I don't even want to keep saying out of the woods, but we're not out of the woods. And then if I go back to once again where I started with the S&P on the month chart, this box here before the recession, before that crash, this box mathematically, all my indicators, the best of all of my intelligence tells me that this area here is where we are right now. We got to go up or we going to go down. And that's all price can do. That's it. And I know as simple as that sounds, it's like, man, why isn't trading easy? Prices can only kind of range and then go up or down. Yeah. But where I started with all that rant was the psychology of trading, your view of money, your lust for money, your comfortability with money. It's a lot to learn. It's a lot to learn, just like any profession. I hate when people tell me like, yo, I want to leave my job in 6 months. I'm like, why don't people say, yo, I want to be a race car driver in 6 months? I want to be a doctor in 6 months. I want to be a anything in 6 months. But you want to jump into the hardest, most technical, most sophisticated financial space in the world to make money, and you're gonna be really good at it in 6 months. Call me in 6 months because you're gonna need some help. It's just not reality. It's not. It's not. And enough of us don't say it. When I say us, I mean people who have a brand and has some sort of expertise. Because, and I won't even say it was an article, not an article, but a video I saw recently. White guy, very, very popular, has made probably millions. Probably I'd say as a trader, but definitely his business. And he was like, yeah, I've made more money from my education and trading company, my business, because it's scalable. You make a good product, yeah, you just run enough ads and get enough people to, affirm that it's quality. Yeah, you can. Yeah, he wasn't afraid to say. He was like, yeah, I've made more money from my business of selling how to trade than actually trading. But if his stuff works, why does that matter? But maybe there's some people it does matter. Either way, my point is incredibly challenging craft, skill set to learn, crazy valuable, fun. If you're intellectual, all of this stuff should be like cocaine to you. It really should. It was to me from day one. Everything about it, right? And I mean, I got an MBA, and I'm clearly, I I went to the Kelly School of Business at IU, Indiana University. Right? So I've always loved business and innovation. I got a marketing background. I worked at agencies, but their stock market thing is it's amazing. It's amazing. Crypto, foreign exchange, futures, options. Oh, options is so creative to me. It's crazy. It's crazy. I'm so like whoever invented options is just like it's deep calculus. Right? It's calculus, but they just literally created a way to make money in all these different types of situations. I have no idea if the stock will be higher or lower. There's a way to kind of play both sides. You can be long and short at the same time. One of your contracts is going to lose some money, cut it at a certain percentage. Trend is kind of more set on the other side. We've made a direction. That one's going to make back what you lost on the other one anyway. You can play both sides. Which is why you got to be a part of my options workshop. Got to be a part of it. Don't miss it. It's going to be good. It's free. Once again, it's not deep math, deep technicals. I can't do all of that in an hour. But I kind of want to, I created something that I think will be really dope. And I got to build on it more. It'll be ready for my class. But I want y'all knowledgeable about the different ways to make money with options. If you only know calls and puts, you're limited. All you know how to do is shoot a 3-pointer. I saw a video on IG the other day with these kids. It was like a high school game. And they went down. This dude, he shot a 3 from like 40 feet out, and then they went back, and then this dude shot a 3, and then it was like literally they was just, and I mean they got to where it was like literally the same 2 dudes were shooting from like half court, and I was like, this is the most boring, fun to watch, a spectacle, but this is the most boring. Y'all are so limited. You only know how to shoot a 3, and you think you can play ball now. You have no game anywhere else other than shooting a 3. You're limited. As great as you think you are, Curry's not that limited. All right. So it's the same thing with options, right? You should be more knowledgeable. You should know how to do a lot more. All right. So yeah, man. That's about it. Thanks for watching. Thanks for checking me out, as always. Subscribe to the YouTube channel. I gotta get better with saying all this stuff. Subscribe to the channel. You always know when I'm doing things. I put the link somewhere in there, so go back and find that link for the free workshops. I'm doing 2, one Saturday morning, one Sunday evening. Those are just prep. Don't consider it a class. Don't come with super high expectations. It's fun. It's light. I want to test a way to kind of see if I can get you guys to understand a lot of these complex, advanced strategies. If I can introduce it to you in a simple enough way to make it say, oh, that's what that is. And then in class, I got 10 weeks to fill it in, make sure you know the break evens, how to use it, when you should use it, how to place the orders, all of that stuff. So, you know what it is. I'm trying to be the best. You're rocking with the best. I gotta say that anyway, right? I was like, what I'm gonna say? You rocking with no, I'm gonna say it, no. You should, anything you do, you should believe you can be the best. Right? So, as always, man, thanks for checking me out. Thanks for watching. Love you guys. Share this video with somebody that you know that you love that just needs to, dig into this more seriously. Think about investing long term, short term. If you're over 30, you got to learn how to trade options. I'm sorry. To me, that's a mandate. If you're over 30 and you live in this American economy where almost 45% of the market cap of the world's value of these 10,000 stocks is here, domestic, in this country. You live in this country at this point in time in life. Talking about world order, 100 years from now, it's going to be China. Right now, it's America. You live here. You have to learn how to trade options. I'm sorry. It's financially irresponsible to not know how, because you don't have to be some super day trader. As my guy, who was that? Bruce, I think. What was he asking me about? Was that Bruce? Or was that Christopher? I think it was Bruce. He was asking me about options contracts 2 years out. It's not a short-term play. He has time. And he'll probably actually make a lot of money. You don't have to be some super day trader. You don't, but those same principles that I've learned as a day trader, swing trader, They make investing, they just make the chart so simple to analyze. I could do this all day. So, but I'm not though. I'm about to go eat. Thanks for watching, man. Yeah, that's it. Subscribe. Stay tuned for the workshop, and I'm gonna make sure you know, of course, how to actually sign up for the course. It's gonna be 10 weeks live, and I'm actually doing 2 classes. I only been talking about options. I'm also going to do a futures and foreign exchange 10-week class at the same time. So think about that. Starting in September, I'm doing 2 classes, 10 weeks, a lot of content. Takes over my whole life to do these. I had to pull some extra people to help me to pull this off because I wanted to do even more, better and more professionally than I've ever done. I wanted to push myself. It's going to be super dope. Options, basics, but also really sound understanding of more strategy so you know what you're doing. And I'm going to actually teach futures and foreign exchange too, because the chart is a chart. Chart is a chart. An uptrend on a 1-minute chart is the same thing as an uptrend on a month chart. Looks exactly the same. But with futures and foreign exchange, because it's leveraged and there is no time decay, there's no, with options, you have the time. You don't have that time with futures and foreign exchange. You got to know what you're doing. Those losses can add up fast. And if you're disciplined and got a good strategy, which I'm going to give you, and make sure you know and kind of really can grasp, then you can also, you can make some consistent, fast money. All right. I'm going to do my part. Y'all do yours. All right. That's it. I'm out. Thanks for watching. Sign up to the channel. Share this video. Love you guys. Have an amazing day. Amazing night. I'm out. Peace. Oh, I got another comment. What that question say? John Song said, appreciate the knowledge. For sure, bro. And then Christopher John said, question about the classes. Are they live or can you go at your own pace for the 9 to 5 guys? Oh, yeah. Man, I got like a little fruit flying here that's antagonizing me. So the classes are 10 weeks. But yeah, I'll be honest with you. Probably about 30% of the people that sign up for my live classes, they know that with me, you have that content for like a year. So some people just sign up because they want to be a part of it. They don't want to miss it. But if you're 9 to 5, you can't. And the classes are always in the evenings anyway. So it'll probably be a Tuesday, Wednesday schedule with both of my classes. Options on Tuesday, futures and foreign exchange on Wednesday. I usually do 8 Eastern. I might do 7 Eastern. I'll go back. I need to kind of figure that out. I might change it just a little bit, but traditionally I've always done 8 p.m. because kids in the bed, work done. You can kind of, put all that to the side, get focused, get in class with me for 2 hours, and we could try and help you to get the things down that you need to know. So yeah, great question. Yeah. And I'll make sure when everything's posted, which is coming soon, you'll have all the details. So great question. Thanks for asking. Doug Blake said thanks. Thank you. Thanks for watching, bro. Peace.